When we look at this, Canopy currently is trading at, Ben, a $303 million market cap, and Tilray is trading at a $1.8 billion market cap. Why do you think there's such a large discrepancy in valuations between the two? Hey, everyone. Another day gone by this week. Earnings week is our next Trade to Black podcast as we dive into more earnings reports. Good to see you. I'm your host, Shad Dales. Anthony Verrill is now joining us once again. Good to see you.
Good to see you. It's a lot this week. Cannabis earnings got everybody moving.
24 hours later, Benjamin A. Smith, good to see you, sir.
Good to see you guys.
Well, here we go. Next up, we've got Curaleaf and Canopy Growth. Interesting to see these numbers. Okay, let's dive into, like I said, Curaleaf's numbers. We begin. Revenue, Curaleaf reported was $338.6 million, up 4% year over year and 1% sequentially, right in line with analysts' estimates. Gross margins of 43% versus 48% last quarter. Net loss rose sequentially to $71.1 million from $54.4 million in Q1, and adjusted EBITDA fell slightly to $70 million versus $73.2 million in Q1. So interesting take here. I know you said earlier this week, Ben, you look for outliers. Overall, what are your thoughts on Curaleaf's second quarter financial results?
Overall, I think it's on the top line. It came in line, which is what you want to see. Revenue was basically right in line with analyst estimates, and there's a whole slew of analysts covering it. So that was good. Now, what I didn't like about it is some degradation on some of the key metrics here. Most notably, gross margin. It went from 48% to 43%.
Yeah.
And I know that there's some possible extraneous reasons for it, but the bottom line is price compression and perhaps a slowing consumer spending has sort of weighed on that. And we've seen this throughout other tier one MSOs. The difference here being is that gross margin fell more with Curaleaf than the others. So that definitely raised some eyebrows. And I must caveat by saying that some of that might have had to do with extra spending in Europe, which some of the other MSOs don't have. So maybe more of their, operating expenditures going towards there. And, that could be skewing the numbers a little bit, but definitely the gross margins were down. Adjusted gross profit was down, operating profit was down. So a little bit of degradation, not critical. I mean, it wasn't a crazy downside report, but it did definitely show degradation on some of the key metrics.
I think that's a fair assessment about Europe. Don't you think, Anthony?
Yeah, I mean, I think Ben's spot on. I think it came in line. I mean, I don't like to see the degradation in those key metrics as well. I mean, one thing that I really didn't like either is the cash position. The cash position's a little bit light. They owe a fat tax payment. And I mean, the math just really isn't adding up there. I was curious for somebody to bring it up on the conference call from an analyst perspective that I was listening to, and it just wasn't addressed. I put out a tweet this morning about Curaleaf to kind of, I put tweets out all sometimes just to see what responses I get, just to see what the actual sentiment's going to be. A lot of people are seriously negative on Curaleaf right now. They think that the European headlines are a Band-Aid, somewhat what we saw the Canadian licensed producers do as far as just PR headlines. They don't really buy into the UK and Germany or see it as a true growth engine for Curaleaf. They mimic sentiment that the profitability is down, cash is down, and the tax payment looming. Are they going to have to raise money in this environment? I think that's a big question that needs to be answered. I think it's not a question that either the three of us have the answer to. But I think that's going to be a big question mark for Curaleaf moving forward and going into Q3. The stock is. Go ahead, Ben.
I was going to say to provide a little additional color on the cash position. The end of the quarter with $85 million. It's worth noting that they have, as part of the Bloom acquisition of a couple of years back, they had to pay I believe 3 tranches of $50 million, and that was owed each January. So they paid one this past January, and there's one in 2024.
Good
so
point.
If you just do the simple math here on the napkin math, 85 million cash on the balance sheet, and they're going to owe that payment of 50 million come early January of 2024. So that brings you down to 35 million right there in 5 months. So people are kind of
They,
looking ahead, saying they're going to have to raise or use their,
yeah,
Wow.
shelf prospectus or whatever, and they
they
have
owe,
over 700 million shares outstanding right now, so it's going to get share count's going to go up at some point.
they owe
Wow.
200 and something million in tax payments, as well. That was on in the numbers. So I mean, yeah, it almost seems as if they're running at a deficit, right now. I mean, I think that just we need more color on that. I'm obviously still on the sidelines, but I was very curious to see the sentiment, that a lot of people saw the European stuff not as a growth engine or not as being, a validator for the story, but just being smoke and being fluff, which I don't really foresee it like that. I mean, I think the UK and I think Germany, while Germany will probably be a predominantly wholesale market, for them, with UK being a predominantly retail market, I mean, I think those are going to be growth drivers for Curaleaf moving forward and a differentiator, as far as the story goes. And I mean, we can get even more into the Curaleaf brand portfolio, which they've been executing on, over the past couple of quarters.
You can understand the sentiment too, because
Yeah,
after no one was really profitable in Canada,
yeah,
in the medical market, even after they went rec, no one was profitable. Very few are actually profitable here, mainly because of 280E. That's the drawback here. So I can understand how people kind of look at the German market and all the excitement about them, opening up the medical market and things like that. And on paper it looks good, but we have over here it hasn't worked out so well. So I can
Yeah.
understand the skepticism.
yeah.
However, it is a huge opportunity, I believe, as well. And I can imagine the margins on some of those medical products, if it opens up the right way, is going to be very high at the beginning, at least.
So how do
Yeah,
you
I
guys
mean, Boris.
go ahead?
Go ahead. I was going to say Boris has more. I mean, Boris could easily be spending the capex, in the United States to fortify the markets that they're in. I don't think he's going to deploy the capex for a grow operation in Portugal, to vertically integrate their operations and be able to service that market with, at the expense of like buying more Florida, retail.
Right.
I just don't see that happening. So I mean, I think that the spend is there. I mean, he made the acquisition with EMAC, which was probably about a year ago, now, and I mean they continue to grow that market. I'm with Ben. I mean, I see it as a great driver of value, moving forward, not smoke and mirrors and just look at this new shiny ball.
So how do you guys then interpret the tweet that Boris Jordan, what was that, 2 weeks ago, about Germany going live Jan 1?
We'll see. I mean, we haven't really seen much from the German government as far as reinforcing that notion.
Mm-hmm.
I don't think. I mean, Boris is known to be a showman. He's known to talk, but I mean, Curaleaf's putting up a pretty damn big headline number, as far as revenue goes. And I mean, I don't think you could argue that they're not executing. And I mean, looking at a map of Curaleaf, they're in every market that you'd want to be in the United States right now, pretty much.
Yeah.
Um, I mean, it's a healthy footprint. You can call Boris a showman, you can call him whatever you want, but I mean, the man's executed. Granted, I think the tax needs to be addressed, the cash position needs to be addressed, and that payment looming, like Ben said, in January 2024, those would all be cause for concern with deploying capital into the business. I don't think you can make an argument to invest in Curaleaf right now over Verano, GTI, um, some of the other big boys, that surprised us and that had, healthier numbers looking forward into Q3.
However, if Europe is what he thinks it is, what an opportunity, right?
Yeah, yeah. I mean, I've said it once, I'll say it again. I mean, Curaleaf is a company that I'm going to invest in.
Yeah.
I'm going to buy their stock. It was sitting at about 280 today, which I don't know how much
Yeah.
lower it can go, but from a valuation perspective, it's going to start to look very attractive pretty soon.
Well, you guys bring up a number, a $50 million payment in January, you said, Ben, that takes it down to $35 million. Like that grabs your attention, right?
Yeah,
Well, and then the tax deferral, as Anthony mentioned too, they defer some of their payments on taxes, so their liabilities are quite high compared to the cash on the balance sheet. And I believe what's 570 million in debt, something like that.
yeah.
I could be wrong on that number, but there's
You're right.
definitely
You're
some
on.
liabilities there, and that's what has people a little bit, not, I shouldn't say concerned, but you have to, like, if you're getting to a position and you're looking to buy the stock as a forward-looking investment, you have to be cognizant of the balance sheet, because you don't want to get caught offside buying in places where they might issue a private placement, for example, unless you have a super long-term view, right? If you're
Yeah.
focused on price points like I am, you want to try to read the tea leaves so you don't get so you get favorable price points as opposed to just buying indiscriminately and saying I'm going to hold for 5 or 10 years. It really depends how you are as an investor. Some investors are like that. They do super great, and they make 10 baggers when they succeed.
Yeah.
I'm not that investor. I like to kind of protect my capital at first, and I think something's coming, but it's not the end of the world. Ultimately, though, I would like to see, for not just Curaleaf, but for everybody in this sector, I think one thing we can't overlook is that even though valuations are really low right now,
Yeah.
based on their earnings profile and revenue profile, it's like these companies aren't really growing organically. So that's something we got to keep in mind. In an early stage growth business, that is a little bit problematic. Like nobody is really growing organically. Like we're seeing these tier ones, raising revenues 2, 3, 4% sequentially, 5% year over year, but they're also adding dispensaries during that time. So they're the amount of revenue that they're producing per dispensary is actually going lower, and that's probably a byproduct of price compression, consumer spending,
Yeah.
not in a favorable place right now.
Why do you think consumer spending has gone down? Just because of the price, Anthony?
Why do I think consumer spending has gone down?
Yeah.
I mean, just look around you. It's more expensive to buy groceries. It's more expensive to buy
Yeah, I
pet
hear you.
food. It's more expensive to fill up your car with gas. I mean, granted, I think we're all lucky that we don't really pay that close attention to that kind of stuff, and that really impacts our daily lives. But I mean, everybody on the income spectrum is buying cannabis. And I mean, the people that are at the bottom of the spectrum, they're being affected. I mean, some people, they pick up a $50 eighth if they have discretionary income. Those people, I mean, especially when you start to get the student loan payments kicking back in the next 30 days, I mean, that's probably just going to get a little bit worse.
Well, you hear a lot of executives that have talked in the past about how this industry is recession proof. Even in bad times, people are consuming alcohol and cannabis, but evidently that may not be the case, right?
Well, I mean, I think that comes with a grain of salt. I mean, yes, people are going to smoke cannabis regardless. I mean, the world could be on fire or the world could be in a utopia, and I think the people they're going to smoke weed.
Yeah.
The amount of people that are buying it, completely different story. I mean, I know that during COVID, it was deemed an essential business, which everybody wanted to parade around and use as a buzzword, and it was great. But at the same time, like, yes, there are going to be things that curb spending and impact these businesses, and I mean, discretionary income is what people use to buy cannabis.
Yeah.
And also substitution, right? Substitution where people might be consuming the same amount of units wise, but they're substituting for lower quality product, right? So
Yeah,
instead of that $50 eighth, they're buying that
Good
lower
point.
THC $40 eighth, right? And then so goes. So that, and Boris mentioned this before in the past on one of our podcasts, that although unit sales are still going up, so the amount of
prices.
cannabis that they're selling, because price compression is sort of negating all the sales gains. So unit sales up, basket size down, and that's sort of leading to a situation where the revenues are sort of equalizing despite them opening up 5 or 6 stores or whatever the case may be, right?
Right.
So
All right. Trivia question. What was the major announcement that happened in this industry 5 years ago this month? Do you guys know?
Not Canada legalization.
No, it wasn't Canadian legalization.
That was
I think
October.
it was Canopy and
$5 billion.
it was
Constellation.
Canopy and Constellation.
Canopy.
Yeah.
Yeah.
That was 5 years ago this month. And wow, it's amazing what 5 years can do. So let's dive into their latest numbers. Net revenue in Q1 F1 2024 to 109 million versus 88 million in Q4 2023. Gross margin positive at 5% versus negative 26% in Q4 2023. Adjusted EBITDA negative 57.8 million versus negative 95.6 million in Q4 2023. You guys want me to keep saying these numbers? It's crazy. Adjusted free cash flow negative 150.7 million versus negative 142.8 million in Q4 2023. Go ahead.
Don't forget the 1.05 billion Canadian in debt that's on the books as well.
So I think I've said enough. They achieved total cost savings of 172 million through Q1 fiscal 2024. A lot of cuts. That's a lot of money. This road was bumpy going into these earnings, Ben, and it's gotten a whole lot bumpier.
Well, if we're going to look at the bright side, and there is a bright side here,
Yeah.
surprisingly, is that the financial performance was a lot better than last quarter because net revenues gained 20 million sequentially, and gross margin actually went positive from the negative 26% last quarter. I don't think I've ever seen a gross margin that low before in my life in any CPG sector,
Wow.
so that's good. Uh, Adjusted free cash flow went down, of course, but in the net loss was reduced dramatically. So there was, if you want to call it, air quotes improvement, but it's still not sustainable. It's still ultimately a dumpster fire, and there's still going concern risks that the company reiterated as well. So, what can I say? Not as bad as last quarter. Is there hope? I'm not even sure I'd go that far, but yeah, definitely you want to see more of this and things trending in the right direction. And that's what, at least, at the very least, that's what this quarter was.
That's it, huh? What do you think,
Yeah.
Anthony?
I I don't even know what to make of it, to be
I
honest.
know it's I hear
Um,
you're saying, Ben.
I,
It just feels like a stretch. Like
I
we're
mean,
rarely
Ben's
here.
right.
Oh,
Yeah.
Ben is
I'm not
right.
positive. Don't interpret that
But
as being positive. It's
but
still a
you're
dumpster fire.
right. But you're right. For a business that's hair on fire, I mean, their metrics are trending the right way.
Yeah.
Um, Granted, I still don't think I still don't think it's a reason to invest in the company. Granted, I know that's not what you were saying either. I mean, the writing on the wall. I don't know what they do with this business.
Yeah.
From an operations perspective, one thing, Acreage and TerraSend are posting pretty good numbers this quarter.
Yep.
If you really look amongst everybody, there's probably a pretty good possibility that, and I'm saying this on pure speculation, there's probably a good possibility that down the road, Canopy USA becomes TerraSend and Acreage. And I mean, those are two good assets. Do they still justify? But I mean, the financial engineering would have to be short of a miracle. I mean, you've got a $300 million market cap, you've got $1 billion in debt, you've got a dwindling cash position, a high burn, no cannabis business really for Canopy that's making money. So I hope they survive. I mean, I'm rooting for them.
Yeah.
If I had $5,000, $10,000 that I just didn't care about and I wanted to take a flyer on it, I mean, I think the risk reward is massive.
Well, I know of a lot
Like
of our
massive.
viewers, comments, they keep saying, like, this is something that I think we've discussed. Like, where is the bottom in all this? And I think if you see a little bit of trend in a different
Oh, it's.
direction, many might feel that this is now maybe the bottom to get in Canopy. But,
I think it's the
myself,
bottom.
you do what?
I think it's the bottom. I mean, I
You
think the
do.
bottom, the bottom of the trading range, the bottom of the trading range on Canopy last week was 30, I think 36 or 35 or 36 cents. That's been resistance 3 or 4 times.
I still can't wrap my
Um,
head around this, that we're talking Canopy is 35, 36 cents.
I mean, that being said, the thing is, the reason why I haven't put any money in it yet, even though I think the risk reward is pretty compelling, is I don't know where the business goes from here, short of a reverse split, some sort of like death spiral financing.
Yeah.
The debtors with that 1 billion Canadian in debt take over the company and wipe out the equity holders. Like, there's a lot of scenarios here where everybody on the where the cap stack gets completely screwed and the equity holders just get wiped out.
Yeah.
For that reason, I wouldn't touch it. There's
When we
way other places for me to put money.
when we look at Canopy's direct Canadian competitor in Tilray, they made an announcement this week with the acquisition, and was it 8 Anheuser-Busch brands, trying to build a portfolio out like Canopy, who already has the backing of a Constellation, and a lot of those brands already within their portfolio. But when we look at this, Canopy currently is trading at, Ben, a $303 million market cap, and Tilray is trading at a $1.8 billion market cap. Why do you think there's such a large discrepancy in valuations between the two?
One company is a much better operator than the other company. Tilray's revenue profile over the past few years has been going up. It's trending upwards, where Canopy's been stagnant, and it's a lot lower than it was,
Yeah.
4 or 6 quarters ago. Tilray's diversified. It has, the business and distribution business in Europe. It can enter the medical market in
I
Europe,
forgot about that.
whereas
Yeah.
Canopy withdrew from that for the most part, and they don't even have cannabis operations there, except for some hardware stuff that they could sell, but it's very small. So yeah, there's a bunch of reasons why Tilray is valued where it should be, and I think the discrepancy is valid. Tilray seems to be has more of a chance to cycle through all this, and it generates more real revenues. Granted, a lot of it's from the beverage business, but it's not, Canopy's a dumpster fire. What can we say? It
Yeah.
just, it was built for something that it didn't become, and it had to downsize significantly, where Tilray has been making acquisitions, and it wasn't built to that same degree, and they've been sort of scaling out at a better pace, and now they
Yeah.
have more of a real business. So I would kind of sum it that way.
Yeah.
Yeah, I mean, that's perfectly said.
Well
That's-
said.
Yeah.
Well, looking back, it was July 26th, 2 weeks ago, when they released their latest earnings. You're right. They have seen growth, 20% growth year over year for Tilray. Some of the highlights included $627 million in net revenue for fiscal 2023, and net revenue grew to $668 million. So pretty much to what you're saying, Ben, backs that up, right?
Yeah, exactly. And they actually earned an operating profit, I believe, 8 million in net cash from operating activities. So contrast that with Canopy Growth, which is what last quarter they were like a negative 142 million free cash flow. Not the
Yeah.
same metric. It's operating cash flow, a little bit different, but you get the gist of it, right? We're
There's
talking
a
about night
stat.
and day here.
There's a stat.
Yeah, there's a
But
huge
can't,
stat,
but
so.
but you could make the argument. You could make the argument that Canopy could have the success of Tilray long term. I don't think they're going to, but I mean, there's a parallel that you could say that Irwin is trying to build the pipes that Constellation has already brought to the table for Canopy. Canopy just is a mess.
It's like Tilray's
In
beating them
every
at their own game with these announcements and
it
beverages
is
to build their
it is
portfolio.
Irwin gets a lot of heat all over, just because he's very, very well paid. And I mean, people are just, they don't have patience. But the acquisitions that he's made for Tilray, when you look at Afria, when you look at um, Sweetwater,
Yep.
420,
Yep.
Sweetwater Brewing, and now when you look at the Anheuser-Busch acquisitions, he's not building for the next 3 years, he's building for the next 20.
Yeah. Good point. Good
Like
point.
he's building something of merit. Like I mean, I agree. I think he might be overpaid, but he's building something here. He's not just running the company.
And they've
Yeah.
been more methodical about it.
Very.
Like, look what happened with Canopy. As soon as they got, and you mentioned off the top, $5 billion deal with Constellation happened 5 years ago. They have
Yeah.
$5 billion, and Canopy spent a lot of that money within the first 18 months. They probably went through uh, memory serves, maybe $2.5 billion within the first 18 months. There was the Tokyo Smoke acquisition, which was what 400 million at the time, or 350 million at the
Call a
time.
spade a
for
spade. That
what?
was an incestuous acquisition. Just
That
Insane.
acquisition was
It's not even
before.
around
Yeah.
here. They don't even operate anymore in a
I know.
retail. On
They
the
have
retail
4
side.
stores. They had 4 stores
And
when
that
acquisition
and that
happened.
acquisition
Four?
happened prior to legalization.
Something like that.
They paid 100 million per store. It was something crazy like that. Like
That acquisition was, I don't want to name names, but there were parties that were involved that was completely incestuous.
Yeah.
That was exactly like Afria and Nuvera, just with the guys that happened to be around the deal for Canopy and for Tokyo Smoke.
Yeah. Well,
Yeah.
Irwin's cleaned that up. 846
Yeah.
valuation for million for a company that was public for 2 weeks.
But they're buying CC Pharma. They're buying a distro revenue, and people argue that. But
Agreed.
they're buying cash generating businesses, even though it's lower margin. They're buying things like Afria at a good price, and not at $25 Afria when it came back. They're buying Brackenridge and lower margin alcohol businesses, but they're producing. They're accretive to the balance sheet, and they are congruent to what they're trying to do on the cannabis side for cannabis drinks and cannabis beds, and that's where the trends are going. So they've been spacing out their acquisitions. They've been buying something. They've been raising a lot of debt and diluting, and that's caused a lot of consternation amongst investors.
Yeah,
But at least
yeah.
they're not buying assets that are deeply unproductive, that are just a black hole. At least they're doing something that is building the business over time. And I have to give Irwin Simon credit for that fact.
Yep.
whether
And
I
they're
agree or not, whether if I was a shareholder, I'd be probably upset because you're diluting to all bits. But I mean, they're building a real business.
Yeah. And then not to take away from that, but there's one name that we haven't surfaced at all during this cannabis earnings, and it's Cresco. No one seems to be talking about Cresco. No one even knows when their earnings are, pretty much. I mean, I found it funny this morning that the name just doesn't surface
hmm.
They've been out of the limelight. They
anymore.
don't do any PR. I don't see anything on
I
social media.
mean,
They seem to be like going dark.
so I
Who's their
actually
CEO?
dug.
Kaiser Soze?
No, their CEO is Charlie
Terrible joke.
Bachtell.
I know who it is.
But I actually dug into the numbers today for the OMMU for Florida. And where was it? These numbers were actually staggering. They have half the dispensaries of pretty much Move AYR and Verano. No,
Yeah.
Move AYR and Curaleaf. They've got
Yep.
half the dispensaries.
Yep.
Meanwhile, they get outsold 4-1 in terms of smokable flower. Move on a milligrams of THC basis outsold them 11-1
Wow.
in the market. Yeah, it's crazy.
Yeah,
Wow.
Verano's doing well. Verano's
Brandon's doing
hot,
real well.
killing it.
The problem with Sunnyside is if you ask any of the people, and I mean, at least people I know, they think Sunnyside is like cheap corporate cannabis.
Okay.
People just don't like it in Florida, and it
Hmm.
shows.
Do your job. You had one job, but maybe that's their approach. Keep quiet and work on. What's that old term? Chive on. Chive on.
Trayvon, yeah, that website went. Where the hell did that website go?
Let's
Did
take
it?
a step back. Want to look at the overall MSO sector as it's experiencing a bloodbath following earnings reports. You guys have a look at this. Like, are you surprised at all, knowing how hard this sector has been hit, knowing most of the reports were in line with what analysts were predicting, Ben?
No, I'm not surprised at all. Obviously the sector has been technically weak, and this is in the midst of a bull market, right? So it's not like the S&P 500 is diving, the Nasdaq index is diving. Like we're in strong bull market territory, and the market's just not performing. So when you have a tier one leader like Curaleaf come out and you see degradation of the fundamentals of
Yeah.
their operating metrics, that obviously is going to spook a lot of people, right? Because if your leader is doing this or perceived leader, then what are the other businesses doing? And again, I'm going to go back to the growth profile that I mentioned before. While these stocks are extremely cheap, and I think they are compelling in a lot of ways, you need growth, and the growth isn't just happening. Right, it's not happening. We don't see any top line growth for 6 months because of price
Yeah, but the
compression and
problem.
all that. So it's like it's very stagnant in a lot of ways, compelling on the valuation side, but stagnant on the operating side. And that's not a great mix when
Yeah.
at the present time.
Yeah, but imagine what the growth narrative looks like when New York gets its shit together. Florida goes adult use, PA goes adult use, Ohio goes adult
Bingo.
use. I
Yep.
mean, then you're talking. I mean, granted, I hate the fact that I even have to say that because everything is hanging on a whim from politicians, just like safe banking, which we all know how that's working out. But the growth here is, at least I would like to think it's on the horizon.
I
Until we
agree.
see movement in Washington, you're always going to see the summer doldrums in this industry as
Yeah.
we go on summer recess every single year. Keep it on the good times as we're covering flourishing industries. We now move to psychedelics. And
And
I
that's the
feel like
carrot that keeps everybody in, though. That's the carrot that keeps everybody
Yeah.
in. What you said,
exactly.
going rec in Florida, Pennsylvania going rec, and there's a lot of catalysts on the horizon. They just need to unlock with reform, and that's just so frustrating thing, right? And
Yeah.
it's really
Get that. And then, as I said in psychedelics, let's get these readouts from MAPS going because I think that will be a catalyst to get this industry. Maybe it's smart to get
Need
it going.
something.
Yeah.
Numinous is bleeding. So
Numinous is bleeding.
yeah.
Like I said, quiet summer months, a lot of people away, I find right now. But one thing I did notice this morning, let's talk about Atai. They announced results from their phase 1 program and a new compound. Thoughts on this, Ben? Is there much to discuss knowing it's in a phase 1, or what was your take in the significance of this announcement pertaining to not only the company, but the industry?
Yeah, I think this is a very well watched announcement on phase one, just because of the DMX 1002 of ibogaine like compound. Just because ibogaine is very promising in terms of opioid use disorders, it's known to be very, very effective, but it comes along with potential severe heart problems and arrhythmias. So
That's not good.
this is not going to be an easy trial to go through. There's a significant safety risk involved here. So they did a dosing trial to see dosing tolerability, and it was mostly no huge adverse events, which was good. There was a patient in the high dose, 9 milligrams per kilogram, who experienced what they call where is it here? QT prolongation, which is like an arrhythmia of the heart, where the heart's beating
Okay.
erratically for a prolonged period of time. So eventually that went back to normal, but those are the type of things that we're going to see in this trial. I think they still want to go ahead and study it, and they're going to look at ways to move this trial ahead, which is good. And this is something on the radar. This could be a key piece for them down the road. It's going to be
What
very
was
tricky on the safety profile.
what?
Curaleaf, by the way, just ripped. It just
Hmm,
completely negated the entire 8% loss on the day. And
wow.
now it's flat. And now it's flat.
Yeah,
What was it?
somebody bought the dip.
Yeah.
Someone bought size. Yeah.
What was Atai's cash position? We know off the top of our head in the last quarter.
I didn't even look at the earnings report this morning. I'd be lying if I tried to even say something.
Yeah.
I don't know if it's like somewhere north of it's like $500 million, something
No,
like
it's not
that.
that much. I thought it was
It's
a
in
little
the
over
Or it's
three.
lower.
I think it's in the threes.
Oh, it's
threes.
in the threes now.
Threes.
Yeah.
And they have some additional funding available to them if it
They do.
drops. So
I
I'm
think they have
certainly looking
additional
at
funding up to 150, if I'm correct.
yeah.
Okay. Well, listen, I appreciate all the efforts this week. We got the CEO of Terracin coming on tomorrow. We're going to post that Sunday evening that dives into Terracin's. Anyone else that we should? Well, we're writing a lot of.
Terracin, Jushi will be interesting tomorrow.
We got Jushi
To see
tomorrow.
where they're at.
Terracin. Jushi's an interesting one. It was one of
Oh,
those
they have 227 million in cash. So not even
227.
close to what we thought.
Oh,
227 with 150 with some financing available in the back pocket if they need it.
Yeah, cash
Yeah.
position, 227 cash position and committed term loan funding facility is expected to fund operations into first half of 2026.
well, trying to think if there's anything else. Forefront Ventures, they hit new lows as well. I don't know if you guys saw that.
Yeah, they're
Pay
being priced to
attention.
insolvency.
Yeah.
It's just
They're
been a heavy sled on that one. Of all the
Wow.
heavy sleds, that's one of the bigger ones.
Forefront, and Red, White, and Bloom are two
Oof.
files that I've never bought. I never bought into.
Yeah.
As far as the businesses, C20, but there's companies also like C21 Investments. That's also and CXXI that actually are very not well known names that are decent businesses.
Did you guys see? Did Planet 13 come out yet or no?
Planet 13's after the bell today or tomorrow morning.
Okay.
I mean, Planet 13's coming. Planet 13's going to come to Florida eventually. They've got that license they bought from TrueLeaf in the Harvest acquisition.
What a dispensary they have out there, huh?
I mean, it's what I think it does 50 million or 100 or something. They do crazy numbers.
Huh.
Have you been there, Anthony? Or
I've been there
Shad,
multiple
you
times.
were there, weren't
I've
you?
been there multiple times.
Last
It's
year
like
at
a
MJ
Sam's.
Biz, they had a big
It's a
poker
Sam's
event.
Club. It's a Sam's Club for cannabis.
Yeah. We had there was Benzenga put on a poker tournament last year at MJ Biz, which we will be going out as well, staying down at the Cosmopolitan. And we've got to do some podcasts on locations while we're there.
Planet 13, we're wrong. Planet 13 numbers are out. Revenue for the quarter was down year over year, 10%, falling to 25 million.
Wow.
So, I mean, that's not something I'd be interested in putting my money into at this point.
And again, that's emblematic of what we're seeing. Some company, even the tier ones that are doing well, like Green Thumb is up, are very, very low growth. And then some of the, tier twos are falling that much. Was that year over year or sequentially?
Year over year,
Year over
9%.
year.
Yeah.
Price compression, bad consumer environment right now. So I think hopefully we can work through this and, and get some regulations involved and get some reform and, things can turn around. There's a ton of catalysts out there. We're still in that sort of malaise of a bad operating environment, bad consumer, bad retail environment, unfortunately.
I love summer weather, but I have no issues with welcoming in the fall when it comes to the sectors that we cover. But gents,
Yeah.
appreciate the time this week. And I will be interviewing, as I said, Ziad Ghanem from Terracin tomorrow. Have that up Sunday night to dive in. Seems to be a darling in the space. Credits to Jason Wild and his team for what they've been doing.
Yep.
Slowly but surely and being patient. And they're in a very viable position. And yeah, the pre-earnings announcements from last week sounded encouraging. So we'll get all the final results and we'll have that up later this week. And hope we obviously provided you, the viewers, good little example, run through of Tilray's numbers and a comparison between Canopy. And as mentioned early next week, we'll dive into the latest earnings reports for Sundial. Sundial, we will report on it and we will do our homework pertaining to that. And for now, enjoy the rest of your week and we'll check back with you guys later.
Talk soon, guys.
Take care.
Thanks,
What's up, everyone? So what'd you think of the interview? Are there any more questions you want us to ask that you want to learn more of? Then leave a comment below and let us know what you think. As usual, share this video with your network, smash that like button, and most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.